35. So we're gonna go and keep get this thing rolling. You know what they say. You know I'm from the south, so what they two with two or more gathered, we in good company. You know what I mean. So we're gonna go. So welcome and thank you for hanging out with us. And Keisha, thank you. My name is Kavanaugh Nweze. I am the founding partner of Nweze Financial Solutions. We provide tax preparation, bookkeeping, and consulting services. And what we're here for today is to talk about contracts. We want to talk about legal implications, give some basics around contracts because we kind of talk about it a lot, and we're going to talk about some legal implications of it, and we're going to talk about financial implications of contracts, and just touch on the basics to help get this information to those who need it the most. So without further ado, I'll get passing on to my partner in I would say crime, but well, she's a lawyer, so she's not my partner in crime. My partner in this endeavor to give out this information, Miss Simmons. How you doing today? Keisha, can you hear me? You on mute.
Keisha, it should be down at the bottom.
Yeah, sorry about that. There we go. So I'm Keisha Simmons. I'm an attorney practicing in Houston, Texas. I primarily deal with clients who are small businesses. I have a background in working with clients in New York City. Most of my clients are from various industries. A lot of them are in the arts field. I help clients with things like entity formations, like forming limited liability companies. I also advise them on agreements that they need to do, vendor agreements, contracts, agreements with individuals who they want to subcontract to do work for them. And I also help clients to manage a lot of their sort of all the things that you would need to know as a small business. Licensures, making sure that you're maintaining your license and things like that. So today I want to talk a little bit about contract basics. So most of us know about contracts in general, but there are two specific ways that you can form a contract. You can either form a contract orally, or you can form a contract that's written. I definitely always advise my clients to try to do a written contract because you have a definitive set of terms. If you have a contract that's verbal or oral, then you can tend to maybe have issues with both people understanding what really the contract is about. So Kool-Aid, if you could help me with sharing the document that I provided, it gives you the basic elements or parts of what it means to form a contract. So a contract is formed when you have an offer. An offer is when someone expresses that they're willing to enter into a contract with you. So for example, it could be something that seems to be very formal, like going to a lawyer, for example. And you speak to the lawyer about retaining the lawyer for services. For example, maybe you have a lawsuit, or you may want the lawyer to negotiate a deal for you. At the conclusion of a consultation, normally the lawyer will say, I'm willing to offer my legal services to you for $1,000 to do this case on your behalf. So that's what's considered an offer, because someone says to you, I'm willing to do this work for you for this much. That's usually the way you see very formal contracts. But you can also do an offer, for example, with someone, let's say, like if you want a landscaper to come to your property, they may say, I'm willing to cut your grass or landscape your property for $50 and I'll come once a week. That's also an offer. So that person is expressing their desire to enter into a contract with you. So that's what we call an offer. An acceptance is when you communicate, I'm willing to go along with your offer. I'm accepting your offer. So in the case, for example, with the lawyer, you would say, yes, I accept your offer of $1,000 for legal services. The same in the example that I gave with the landscaper or the person that's making sure to maintain your garden or your property. You are accepting their offer of $50 to mow your grass or to tend to your lawn. So when you say to that person, you call them and you can say, yes, I accept your offer. Or you could formally actually sign a contract. And those are both ways that you can signal an acceptance. Consideration is the third basic contract term. There's really offer, acceptance, and consideration. Consideration is something of value. So when we learn in law school about consideration, we learn a thing of value must be exchanged. And the way to really understand consideration is if we look farther down in the slide that I gave, when we look at gifts and promises. A gift is an offer when you invite a friend. For example, you say to a friend, I'm willing to take you to dinner. So when you hear that, you know that that's a gift. Or if someone says, I promise to take you to the movies, that is not a basis of a contract because that's a gift, right? So the understanding of what's a gift and what's a contract is different. So consideration, if you go back to the top part of the slide, in those cases, there's no consideration because it's a gift or it's a promise. You don't know how much the dinner costs. You don't know how much the movies cost. You just know someone's treating you. So the consideration is the part of the monetary exchange. That's what consideration is. So in those cases, no contract is formed in a context where there's a gift or a promise. I want to talk about other cases where there's no contract. Revocation is one of those cases because if you make an offer, you can revoke it for as long as the contract hasn't been accepted. That just really means that, for example, if you offer, so if a lawyer, in the case of the landscaper, if he comes and he says, I'm willing to mow your grass for $50, and you say to him, let me think about it. There's no contract in that case because you said, I will think about it. You didn't say yes, you didn't agree, you didn't say, come on Friday, I'll give you the money. All of that would have been forming the contract. Instead, you said, I will think about it. In that case, a revocation would mean if the landscaper comes back to you the next day and says, you know, I went to other people in the neighborhood and I think it really should be $100. So if you still want me to do your lawn, it's actually $100 and not $50. He's revoking the initial offer and he's communicating that now it really will cost you $100. At that point, because you haven't accepted the contract, you were not in a valid contract, right? So because you waited, because you didn't accept the $50 at that moment and you hesitated, now he's offering you a new contract and he's revoking the previous offer. So in the case of a contract, no acceptance of the offer was given. He revoked the former offer and gave you a new offer. And now it's $100. So that's what a revocation, right? A counter offer is more commonly what we see in the context if you're a small business. And I think Kavanaugh will also talk about invoices, and that's where we really see a lot of where a counter offer will come into play. That means, for example, in the case of the landscaper, he may say, I will mow your grass, I will plant new flower beds, I will put new soil in the ground, in your front yard, in your backyard, and I'll do it for $300. And then you say, that $300 is a lot of money, or that $100 is a lot of money. How about you only do mowing the grass and I want to just pay you $50? So you haven't accepted his offer of the $100. You're now proposing something different, right? So that is considered a counter offer. If you change the terms of the offer and don't accept the offer outright by saying, I accept the offer, I agree to the offer, I'll pay you the $100 to do all of those things that you described to tend my lawn. Instead, you propose something different. You propose different areas of the grass to be cut or different areas of the lawn to be tended, or you propose a different amount of money, right? So counters offers are also seen in the context of invoices, which I described that Kavanaugh will get in more in detail with you. That's where you mostly see individuals and small businesses where there's a lot of counter offers. So you may have a contract to with a lawyer, for example, or another individual for $500, let's say. But then you get the invoice and you look at the invoice terms. There's parts of the invoice terms that you may not agree with, and you may want to do a bargain within the contract that you have or offer another counter offer. Okay, lawyer, I know you said that I have to pay you by Friday. When I look at this invoice, that's what it says, but I won't have the money right now. Can I pay you half? And can I pay you the rest next month? You're proposing a counter offer after looking at the invoice and saying, I really don't have all this money. I have to give a different amount of money over a period of time. So that sort of is in a nutshell, the contract basics and how they connect to invoices. And I will leave it to Kavanaugh to go more into detail about the basics and the details within an invoice itself.
All right. Thank you, Keisha. Appreciate it. And so I didn't see any questions in the chat for the time being. If anybody has any questions about what Keisha covered, before we move on to the financial aspect, please drop your questions in the chat so she can go ahead and touch bases on that. So I'll give you a couple of minutes to, if there is some ideas or some questions rolling in your mind, to put that there. In the meantime, as we move forward, as Keisha said, we will be I'll be talking about those financial implications of these contracts. And now I want to kind of, as I was thinking about talking about contracts, we're talking about commitments and agreements, and it's not always when a particular commitment for your business or to provide a service or to receive a service actually is a financial transaction. And in the financial realm or the accounting realm, there are two particular terms that determine when the transaction is when a particular type of transaction should be added to your financial records. And those two terms are cash versus accrual accounting. So what I'm gonna touch on the basis of that, and then I'll touch on the basis of how that relates to our offer, our acceptance, and the consideration of what Keisha was explaining here. So Kula, can you go ahead and pull up those slides for me, please? And so one of the, like I said, the two most basic methods of accounting is cash versus accrual. And people might, I know everybody heard of cash. You might not have heard about accrual. If you can hit that open with Google Slides, it should be a way to present it. And so the cash is the most basic. You can go to the next one. It's the most basic function, and it's something that everybody, well, most people default to. And cash accounting is an accounting method where payments and receipts are recorded during the period in which they are received, and expenses are recorded in the period in which they are actually paid. In other words, revenue and expenses are recorded when the cash is received and paid. So all that to say is when does the money move? Then once the money moves, that's when it's added to your particular records. All right. If you can go to the next one. Now, if we talk about the accrual method, the accrual method is it measures a company's performance and position by recognizing economic events regardless of when cash transactions occur. Whereas cash accounting only records transactions when payments occur. So if we're talking about the accrual method, if we talk about that acceptance, when that offer is accepted, then that is an economic event, even though at the point of you accepting my invoice or you accepting this contract, you didn't pay me, I didn't pay you. But at that point, if we're using accrual method, as soon as we can acknowledge a transaction and have a reasonable estimate of that transaction, then that particular economic event can be recorded in our financial records. And I know because some of you been like cash versus accruals, like Kavanaugh, I've been in business for years, I ain't never heard of it. When do we make this choice? So on and so forth. Well, you make this choice every time you file a tax return. And believe it or not, cash versus accrual is an internal matter. It's not something that the IRS or the state demands. It's about your preference. So that's why I wanted to lead with a little bit of information of cash versus accrual. And then you might be again like, I've never made this choice, Kavanaugh. Well, usually if your taxes have been filed for your businesses, it has defaulted to cash. And there is a way to where you make that choice, even though you might not have seen it. Can you go to the next slide, please? So this is a quick screenshot of your Schedule C, which most people are not Schedule C filers, right? Sole proprietors or owners of LLC, so on and so forth. If you see right there, that line F, that very small print and my weirdly shaped oval, that accounting method, then you make the choice of number 1, 2, or 3. And there are other accounting methods. Cash and accrual are the most basic and the most common. If you can go to the next one, please. Yeah, there we go. And this, if you look in that top left corner, you see that this is on 1120. This is page 2 of your 1120. You got to make that choice. So every tax form for a business, we have to make a choice. It mostly defaults to cash. If you can go to the next one for me. And then again, this is a 990. A 990 is for nonprofits. So believe me, nonprofits also have to make this choice of cash versus accrual. Okay. And I just wanted to show that. So you can go ahead, go to the next one. So let's think about this, right? So let's say Kavanaugh, myself, I need Keisha. Keisha, I need some legal services. I need your help. All right. I went a little bit crazy, and somebody is they coming for me. I need your legal assistance. So let's say as of December 15th, I made an offer to Keisha to pay her for her legal services. She accepted that offer. She agreed to it. And she gave me consideration. Let me know if I'm using this correctly, Keisha. Her consideration was her legal services. It would cost me $2,000. I'm like, cool. So up under the cash method at 12:15, then now this is on Keisha's side, right? So as of December 15th, when we make this agreement and enter into this contract, at that point, I haven't paid Keisha yet. Keisha recognizes that $2,000 of revenue immediately. Oh, I'm sorry. Cash method. No, I misspoke. I paid Keisha on December 15th. I remitted my money. So she recognizes the revenue on December 15th. Now, of course, you legal services, court dates, all of that good stuff. My court date didn't come up until January 15th, to where Keisha and her staff goes to represent me, do whatever they need to do, speak to the judge, beg, plead, whatever, protest, whatever they do, the press conference, all of that good stuff. Keisha completed that work on January 15th, where she incurred $1,000 worth of her staff expenses, maybe some filing costs, things of that nature, and dealing with Kavanaugh's craziness. That's when she incurred her expense. So in December 15th, up under the cash method, she will record her $2,000 of revenue. However, on January 15th, when she actually incurs the expenses for covering my butt for whatever I did, then she would acknowledge her $1,000 in expenses. So that's what I talk about cash method. You acknowledge the transaction, which it happens, which is the default for most small businesses. Now, in the accrual method, same situation. December 15th, I pay Keisha $2,000 for her accepting the contract that we went into. However, on in December 15th, she's received $2,000, but she has not performed the service yet. So she will recognize right then and there that she has an obligation to provide me $2,000 worth of legal services, which is not revenue. Revenue is not earned. Revenue is not acknowledged until it is earned. So right now, Keisha's just holding my $2,000. Usually, this is synonymous to the term retainer or deposit. So Keisha is holding my $2,000 deposit in December. Keisha goes to court for me on January 15th, and they finish everything they need to do on my behalf. I get to go home free. Now, on January 15th, now Keisha recognizes that $2,000 worth of revenue and sales that I paid her for legal services and any related expenses at the point that she can estimate or knows what that is. So I wanted to kind of illustrate that, because as you can see at the cash method, even though the contract is and the services are delivered at the latter date, that is recorded in our books as soon as that money moves. If the money hasn't moved, she didn't acknowledge her expense in December. She acknowledged her expense in January when she had to pay her staff, when she had to pay those court fees. But however, in the accrual method, she receives the cash, but the revenue is not acknowledged because she did not deliver the services until January. So in January, that obligation, my deposit, converts into revenue to Keisha, because now that's her money that she owns. She don't owe me nothing no more. Okay. So that's what I wanted to kind of touch on. So in summary, if you can go to the next slide, financial records of cash method users are not affected by contractual commitments alone. So if we talk about, if we talk about that offer, that acceptance, and that consideration, that doesn't, if you are cash method, it doesn't hit your books yet. But if we are accrual, we must acknowledge it. And there are some complex transactions that we need to do to be able to acknowledge it and record it appropriately to your financial records. So accrual method, when you enter a contract, when you accept an agreement, you need to be making some changes to your financial records. In addition to when the cash actually moves, there are other financial transactions that you need to record. However, in cash method, it's only when the money moves. I think it's a Cardi B song. There's something like that. I'm not gonna sing it. I ain't gonna quote it, but I think it's something like that about when the money move. I make money move. All that. Woo, woo, woo. Cardi B is cash method. But anyways, next slide. So, and one thing is as Keisha stated, the contract is the holy grail. That's everything. That is the omnipotent, and if in the invoice is the 10 commandments. So it supports it. It gives you the rules and the details of a particular transaction that is spelled out in the contract. So the contract will say, hey, Kavanaugh is paying Keisha $2,000 for legal services, but when she sends me an invoice, that invoice will have the date, my court date, the amount of time that she spent on my case, the amount of staff members, and the amount that I've already paid, and if I owe her any more. So that invoice is supporting our contract, it's supporting the acceptance of our agreement of our particular consideration. Okay, can we go to the next slide? So here are some common terms that you are usually receive or used on invoices, and different terms are used at different for different industries and for different purposes. However, once again, this should support your contract. So in your contract, it should say, hey, all services will be, if you got payment in advance, all services must be paid for in advance. That should be stated in your contract. When you submit an invoice at the same time, then that PIA, payment in advance, you're letting your client know that you expect them to pay the total before any work starts. Then that's what that means. And so yeah, that's what that means. You can specify these things, and one of the things is that you have to be consistent. So if, like, a lot of times we do catch ourselves moving into agreements with other business owners, and there may not be a formal contract. However, there should be, and this invoice should support it. And also, the invoice should be consistent. So if you use PIA or CIA, cash in advance, every time that you bill this particular customer, it should be the same. It should still support that same contract, unless it is a different engagement and you have a different agreement with that particular that customer or client. So you have cash in advance upon receipt. So it's like, look, I brought it to you, you received it, I need my money. Net 7, what that means is that usually you have 7 days from the invoice date to complete payment. And likewise, it might be net 21, net 30, so on and so forth. When small business owners are working for large institutions like schools, city governments, things of that nature, huge, large nonprofit agencies, usually they will have a net 30 policy. And they're saying that whenever you send me your invoice, I'm going to pay, it's going to take me 30 days, excuse me, to review that contract and invoice and make sure I pay you appropriately. So these terms are used on both sides of the table. However, the key is that they should be consistent and they should be supported by your contract. If they are not supported by your contract, the next step is your invoice, and your invoice having the details in it. And believe it or not, depending on your system, you can have there are different invoicing systems, and to where you can send the estimate and the client can click a button to say, I accept this estimate, I accept this quote, and then that moves it to a contract, which is also synonymous with the terms that Keisha was sharing us earlier. Is you make an offer, it's accepted, and then you quantify what this person is considering and paying for in those particular services. So, and then again, just a few other terms. EOM payments are due at the end of month. You got the 15 MFI payment is due at the 15th of the month of the following invoice date. So that means if I invoice you today on May 7th, then I need that invoice paid by June 15th of the following month. So these are just some common terms. Another thing that I've seen trip up a lot of people is the 2/10 net 30. What that means is the payment needs to be made within 30 days. If the payment is made within 30 days, the payment should be made within 30 days. However, if you make this payment within 10 days, you receive a discount just for paying early. So this incentivizes some people, like, oh, I get a discount by paying somebody earlier. Then you can do that, and you can make that payment, and you can save yourself a little bit of money. That vendor, that customer, you should also list out the difference. Okay, this is the 2% discount. This is the amount that you will pay. By today's May 7th. So this is the amount that you'll pay by May 10th, May 15th. and this is the amount that you would pay after. So pay close attention to these terms because they support the contract and they also determine when the services should be offered and when payment should be received. Now, if these terms are not adhered to, that could be a possible breach in contract, which could also either prevent you from receiving the funds that you are due for delivering the services, or it can increase your costs if you are purchasing services from someone. So is it at that point when you have to make that extra payment or you are missing out on a payment for cash benefit or for cash method users that this will affect your financial records. I didn't see no questions pop up, so I guess y'all caught all of that, and everybody good, and you understand it to a T. You can stop sharing now. I think that was my last slide. So all that to be said, these two worlds, this legal and this financial world, they work together and they have some similar but very different implications, even though it might be your business, which is the same business, but there are some financial implications and there are some legal implications. And all that good stuff. Keisha, did I use your terms correctly? Okay, so my legal clinic paid off. All right, great. And so that's what we wanted to do, to kind of give a touch basis about how these different terms, how these different contracts and agreements can affect our companies, and how we can make sure that we are adhering to what we are if we are, and what we are adhering to when they make certain financial changes in our records for our business. Okay. And so does anybody have any questions, any feedbacks, anything that this can maybe have reminded you about? You can, like Kule said, you can unmute yourself, or you can even post your question in the chat. No, everybody good? All right. I guess now I know how that school teacher feels. Like nobody Cardi B got her money up front. So yeah, she PIA, payment in advance, all of that, so check her contract on her invoice, all of that good stuff. And it's some like these things we use that pops up in our atmosphere or in our arenas often, to be able to understand these. So we're always seeing contracts and invoices. When you see a utility bill, you should be able to look at that utility bill differently. That utility bill should also support that contract that you entered with NRG, TXU, wherever you are in the world, and whatever company that you use. So I hope that is helpful to you and your business, and to be able to guide you all.
I guess I could ask a question, or have you talk maybe a little bit about templates, because I think template invoices, for example, right? What do you think about small business people? Because sometimes they can't necessarily hire a lawyer or pay to, have an invoice professionally done or speak to an accountant. Like, what do you think about small businesses using template?
I think that that's fine. I think that honestly, it's what's the proper way I can explain it? Sometimes it's it's almost it seems to be a barrier, and it stops people from even using the simplest of methods, similar to the like we've coached some clients through simply using that carbon copy. That's something that you can go buy in Walmart. You got the carbon copy invoice legal pad. So that in my eyes, that's a template and it gives you the every bucket that you need to fill out, whether it's for terms, who you're billing, how you're billing, and the services that you're providing. So if you're talking about an analog, handwritten, you can find those invoice books, receipt books. You can find that at Walmart and Target nowadays in the office section or Office Depot. If you want to get more technical, nowadays PayPal sends out invoices. PayPal, what's the other one?
Venmo?
I think
No.
in Venmo. I don't think Cash App you can send an invoice. You can request
No,
one,
I don't think so.
but not a technical invoice. What we use and we love is QuickBooks, because in QuickBooks you can make those different types of templates for different types of services that you provide. You might have a service that has to be like Cardi B. She always paid PIA, always payment in advance, right? You know, for and so it really depends. But yes, templates do help, and they can make our lives easier. So if you're not so much on the software or compute or want to be computerized, go by Walmart, go to the office section, get a template invoice. Go by if you are a techie, you can use QuickBooks, which ties directly into your bookkeeping software. You can use Zero, and then PayPal, Square. I think that's what not Cash App, but Square. They actually can send invoices and things of that nature to where you can itemize all of, you can get as detailed as you want, and you can also put special notes for your client, like, hey, I made this adjustment because we incurred this particular expense because you weren't there when you were supposed to, and we had to wait for 2 hours or whatever it might be. You can, those templates and these systems allow you to use that. Um, so that I think they are effective, and they are available, and it's not only good for your client, but it's also good for you, because you can also, it can help you track these things a little bit better rather than a notepad, or trying to keep it all in our mind, and trying to remember who owes us a certain balance, or have they paid their balance, or whatever it might be. um, which honestly, in thinking about templates and invoicing, honestly, I know a lot of people, even myself, every now and again would go to, I guess, Rocket Lawyer, if you will, or Legal Zoom or whatnot to make an agreement. What is your advice on that? How do you how would you advise somebody who is looking into using Rocket Lawyer or LegalZoom to create this particular agreement that they need?
So, I mean, I think if you have a basic business and it's just a one-time transaction, so similar to the landscaping is not as big of a deal. It's $50. It's a small value.
Mhm.
And it's one time. Let's say I just want you to come cut my grass this one time because the other guy's not available. I think in that context, if you want to do a contract, it's fine. But if it gets to be multiple transactions over a period of time where there could arise, like a dispute could arise, where I told you Monday and you came on Tuesday, and then the next week you came on Thursday, because we have multiple transactions going on, those are better if you create a contract on your own or with a lawyer. So those are more complicated transactions that may go on for 6 months or a year. I would really encourage you to do those type of deals with a lawyer. But if it's a one-time thing, then you can get a template contract or something like that. Or if it's a very low amount of money, you could do a template. But if it's something where you're contracting for a year, for example, with someone to come every other week to do a certain service for you, that's something where you want a contract for. Because over time, you start to have a verbal understanding of what you think you signed in the contract, and you may not have something to refer to that's ironclad. if that person halfway through decides they don't want to do that work anymore,
Mhm.
or you decide you don't want to do the work anymore, are you allowed to terminate the contract? What does that look like? Will that breach the contract? If you say, well, I could make more money across the street, so I won't go to Kavanaugh's house anymore to cut his grass. I'm just going over here. So if you have a actual written contract that explicitly says you must do this from January 1st, 2021 to December 31st, 2021, that person can't make that decision on their own. So in contracts, it's a little bit different. The more complicated it is, the more you should have a contract that you actually sit and think through and write out.
Right. So in that situation, if I enter into a year-long contract for somebody to do my lawn, right? They cut out on me in May. So does that am I can I get my January through May money back?
Well, do you have a signed contract or is this a verbal agreement?
If I have a signed contract, so now does that help me?
You have a signed contract and you pay for the whole year up front?
Well, no, not up front, to where it might be an agreement, to where it's like I pay you monthly or pay you per time. Does that negate the services that already have been offered, or that just negate the agreement?
Yeah, they're at that point, they're obligated to perform the service. Once they sign the contract, they're obligated to perform the service for a year.
Okay.
Most people don't pursue something like that in court because it's so much money to go to court. It's easier to just get a new person to mow your lawn. Unless you have acreages, then it could cause you a problem because maybe you have a garden, maybe you have to have that person tend to certain parts of so that you can actually sow certain crops that you want to sell later. And then that interfered with your business because they didn't do the landscaping and then animals came and ate all your stuff or it overgrew where the garden was. So you may be able to sue if it's really important to you for your industry, for your living. It makes sense to sue on that type of contract. But if it's just for recreation, you may decide, let me just get a new lawn person. So.
Got it. Okay, cool. So yeah, that definitely helps me. So I guess I need to just give me a new lawn man.
I have a question for you guys, if it's available for one more.
Go ahead.
Sure.
Relating to COVID, so kind of on this same example, I had a client, corporate client, they pay us for the year in January. We go see them every other week. So say I got paid in January, we probably saw them, 8 times before COVID shut everything down. So this is more like a small business consulting, it's their contract. Because actually these people, I tried to give them a contract, and when they said they was gonna send it by their law team, I said, oh, okay, never mind. We could just go with yours, right? Because I really just wanted my money. And so look, so I was hitting them up, during COVID, checking on them, seeing what the protocol was. So we out of 2020 now. So I personally, my company personally, I mean, we took a huge loss as chair for hire, with company. So I personally cannot ride out that contract. Like if they were to call me and say, hey, we still got, 34 weeks left, I've already know that I will lose a client, but they don't seem to be tripping, right? So with COVID, where are you guys seeing? So I guess my real question is, how do I approach them at this point, knowing that they prepaid and now that everybody's coming back online, business is picking back up, to reach out to them? Well, nobody's contract that I'm aware of covered anything like COVID. And so do you guys have enough information to give me any feedback of this limbo situation I'm in and not being able to truly make good on the money that I had to use to survive during COVID? A small business.
I think I understand you. Keisha,
Okay.
you gonna
Yeah, so I was gonna say COVID is that So COVID is very interesting. That's actually a really good question. So COVID is really interesting because of the pandemic. So this is a, once in every 100-year thing that happens. But it actually is probably in your contract. So if you think like your lease is also a contract. So there's that part of the lease, and there's that part of most contracts that say things like, if there's an act of God, if there's an earthquake, if there's a hurricane, if there's a natural disaster, then this lease becomes void. But that never happens, so you never really look at that part of the lease. Your contract probably has that part in it that says, if there's an act of God or if there's a natural disaster, then the contract becomes terminated or may have to be negotiated again. But usually they'll terminate the contract. So at this point, you're no longer really under that old contract because of the pandemic. But out of your kindness, you could offer to give them maybe credit on certain things, but for renewing a contract with you or something like that. But
Okay.
so in the case of a pandemic, that's an act of God and that nullifies. That's why the leases were so easy, you know, for people to say, you don't really have to pay your lease because now it's COVID and people are paying because that's an act of God. So.
Wow, I missed on that one. Well, thank you guys for that. I appreciate that.
No problem, no problem. Yeah, and what I was gonna say something on the line. I was like, well, what was the end date of that contract? And if they didn't terminate it or extend it, that thing is done. You know?
Yeah, but usually an act like a pandemic will just nullify the whole thing. It's like if an earthquake happened and then the building just came down. So the contract's over. You can't expect to keep getting money from them at that point or keep giving them services at that point. Let's say their building an earthquake just happened right there. That's the similar act of God. So you wouldn't really be able to go to them and say, well, even though your building is shut down, I'm still able to offer them. I'm fine. I can still offer this massage. You should still pay me. So it's sort of the same context. Everything is just terminated and over.
Yeah, no, I appreciate that because that's the confidence I needed. And you said, when did the contract end? Well, this was like our 4th year together. So, I mean, they always ended at the end of the year and started anew, but you know, with letting vendors in, they got tricky. But so now that business seems to be back online, I guess you just gave me the confidence to know that, hey, that contract's over. I did win. And hey, let's start up a new one, guys. I know y'all over there stressed. Okay, good deal. Thank you.
I'm glad we could help.
Absolutely.
That's what's up. That's what's up.
Yes.
Already. Anybody else? I know we're coming to the last.
I
few
just
minutes.
had a quick question. I guess maybe I didn't understand about the part. So she received all the money up front. So the portion of the money that she didn't provide the services for, that's all like under the bridge, like she wouldn't owe that back?
Technically, like, no, like if you tried to go to court, but I mean, out of your goodwill, you probably would want to give it back, especially if it's somebody that you want to keep doing services with. So that's why during COVID, like the airlines kind of reimburse people. They didn't really have to if it's not refundable, but they did it anyway. So it's sort of the same principle. You don't have to under the contract because it was an act of God, but you probably should try to at least work a way to give a credit, or let's talk about how we can apply what you paid over the life of the next 2 years or something like that. Similar to what the airlines did. Normally you wouldn't get your money back, but they gave you credit to take a flight later.
So that would be
so it's similar.
If the company said something, then okay, we can maybe
right. So like, remember those airline tickets and vacations that you purchased that were non-refundable, and then COVID happened. Right. They didn't have to give you your money back because those were non-refundable.
Right.
But because of their goodwill and because they wanted to be nice and have good publicity, they reimbursed you or they gave you credit.
Got it.
because of COVID. So COVID kind of nullified it, and then they kind of had a windfall, like, oh, great. Well, we got the better end of this deal, but in order to have goodwill, in order to have good publicity, they gave you kind of a credit and all.
Okay. Well, thank you for our legal clinic, Ms. Simmons, we appreciate it. And we also appreciate everybody for choosing to hang out with us on a Friday evening. We hope everybody's safe and sound, and that the information was valuable to you in your endeavors. If there's anything that you need from us, you can always email us out. We will send out a recap, and we will also be able to send out the actual the recording meeting today, so you can review if you need to. Okay. All right. So if it's not, thank you, Sharice. So if not anything else, I'll leave you all to have to your Friday evenings. Behave. No crazy parties if you're not inviting me and Keisha and Quilea. And then other than that, everybody, before you leave, everybody put in the chat, happy birthday, Tiandra.
Oh, yes.
Yeah. So happy birthday.
Thank you.
I'll sing the Stevie Wonder version at another time. I'm not going to embarrass myself in front of everybody.
I'm gonna hold you to that.
All right.
Happy birthday.
Thank you, guys. I appreciate that.
Really.
All right. Thanks
All right.
again, guys, for doing this for us.
No problem. Y'all have a good evening.
You're welcome.
All right.
Okay. Bye-bye.
Bye.
All right, all right.
You still there?
In here, I'm gonna stop recording.
All right.